Matt Marsden is Director of Consumer Retail Research at Samsung Securities here in Hong Kong. Morning, sir.
Good morning.
Yeah, that sourcing deal, that deal with Wal-Mart there really sent the stock into a tizzy last week. But the fact is, people punched this stock to north of 23 times earnings. I mean, it's not a cheap stock anymore, is it?
It's not a cheap stock, but it is worth it. We still like the stock very much. I think the important thing to realize is that Li Fung have built a sustainable competitive advantage with their global sourcing network that allows them to source for customers in a very cost-effective and flexible way. And this is why Wal-Mart want to work with them to gain access to over 15,000 suppliers in 40 countries. So the Wal-Mart deal would be very impactful, not so much for the bottom line this year because there'll be some startup costs with an initial impact of sourcing $2 billion. But Wal-Mart has the potential to double Li Fung's business over the next 5 years because of the size of Wal-Mart. So this year we think that Li Fung will source about 20.
Do you think there's more to come for them? You think there are more deals like this? Because they've been on the trail like there's no tomorrow. I mean, they've got this insatiable appetite to just control things.
Well, they're certainly very acquisitive, and they'll continue to make opportunistic acquisitions. But the Wal-Mart deal is so important because they can add an extra $20 billion to Li Fung's sourcing business, which could double the size of Li Fung's sourcing business by 2015.
Talk to me about a company which I believe is reporting this week, IT, right? Penny stock. This is like, I go in there and I feel like an old fuddy-duddy because everybody's about 23 years old there. Yeah. But this is a stock you think has tremendous upside. Tell me why.
Absolutely. Well, we're both probably past it in terms of fashion retail. But IT, we think is very interesting. I love the stock. And we think there's 70% upside to a price target of 220 on a one-year view.
What's attractive about them? I mean, this is funky, like, teen grunge, well, not grunge wear, but it's like, definitely not stuff that I want to slip into.
Well, they actually have a very wide range of brands. They manage over 300 brands, including some high-class stuff like Stella McCartney for women, so again, maybe not for you. But they've got a very profitable and established business in Hong Kong. And that should benefit from very healthy Hong Kong retail sales growth. And we're looking for 12% to be reported tonight for Hong Kong retail sales.
They don't make any money in China, though, right?
No,
about a quarter of their revenues come from China, yet they don't make money. Isn't that a drag?
Well, this is changing right now. So 26% of sales are in China. They're traditionally not profitable, but that's changing as they're gaining economies of scale, and also just getting the formula right in China. So they'll break into profitability, we think, in China this year, which will provide earnings upside surprise. So it's trading at about 9 times PE, a very attractive valuation.
So it's cheap compared to its peers then, definitely.
Yes, definitely.
Okay.